Back in March, our next guest came on this very show after slapping a penny price target on AMC shares, saying there was no way AMC would be able to pay down its debts. Since then, the company has raised more than $1.2 billion in equity and added $30 billion to its market cap. Let's welcome back Rich Greenfield of Lightshed Partners. Rich, great to have you with us. And I know that you have the model. You're going to stick with your model. But at the same time, has anything changed? Has AMC at least given itself a small lifeline to sort of navigate the very, very rough waters of this reopening?
Well, let's just step back. I want to address something that you and the Fast Money team were just talking about, in terms of diamond hands. I mean, just to set the floor in facts, in the last 5 trading days, it's traded 3.2 billion shares. There's only 512 million shares of AMC outstanding after today's 11 million share sales. So the idea that this is just people holding on to the stock and like they're never going to sell, just explain, like, how is this thing traded 3.2 billion shares? The amount of volume, it's the most traded stock in the entire world over the course of the last month. This thing is trading like liquid. There's no short squeeze. I mean, a short squeeze is when you can't get out. Like, there's not, where the short interest is so high relative to what it's trading. Anyone could be out of their short position in 4 minutes. Like, there's no liquidity issue here. This thing trades like water. And so I think there's a bit of a misperception that what's really going on is just retail buying from other people in retail. And, toward what was just being discussed, like, someone's making a lot of money here and a lot of people are going to be left holding the bag, because at the end of the day, the fundamentals here just don't support the valuation. I mean, Cinemark, exact same company. I mean, same industry, same, they don't own their theaters. They have the same movies that come out. Same EBITDA in 2019, effectively, as AMC. It's a $5 billion enterprise value. AMC is at $30 billion. Exact same companies, and one company's got a stronger balance sheet, Cinemark, than AMC does. And so this is just factually, bonkers, literally, when you look at sort of the relative positioning of these two companies in the same exact industry.
So is there any way, Rich, in your mind, to explain this? I mean, you've been through this for a very long time.
You can definitely explain this. No, you can explain this. Absolutely. I mean, when you have sort of, a lot of investors buying dramatically out of the money call options and sort of creating this effective gamma squeeze, I mean, and you have a lot of, funds that are playing on momentum as well, you can see how these spikes happen up and down. I mean, just look at the swings that happened today. Again, cutting through it all, though, ultimately, can this company actually delever? I mean, the only way to answer your question, Melissa, of like how this company could save itself from going out of business, it still has to issue 100 to 200 million more shares. I mean, it's losing money every day. It didn't make money, as you pointed out, in 2019. This company needs to raise a lot more capital. You saw what happened when it raised 11 million shares today. It probably needs to raise 150 million more shares at this stock price, let alone what its real stock price should be, where it would have to issue hundreds of millions of more shares. They don't have the authorization, though, to do that. So they need all of these retail shareholders to actually vote in favor of the company massively diluting them over the coming year. And so it's going to be very interesting whether Adam Aron can convince them to be diluted, because without dilution, they're really between a rock and a hard place. Like, they have debt covenants. They have to get back to 85% of box office by Q4 in terms of attendance, or they're going to start tripping covenants. So they need to issue a lot more equity, and soon.
Rich, I think the world of you. It's Guy. By the way, you've been coming on the network with us for years, and I think you do extraordinarily thoughtful work, and I still do, by the way. This has not changed, because I don't think the story has changed. I think the only thing that has is the stock price. My question to you, though, is what have you learned since the date Mel mentioned, that March date? Have you learned anything in terms of, the way you present things, just anything about the business? Because it has fundamentally changed now over the last 4 or 5 months in terms of your community.
Yeah, look, I mean, I'd say from an industry standpoint, I think what's interesting, and you had Ari Emanuel was on CNBC earlier. They reported their first quarter at Endeavor as a public company. And Ari last night on their earnings call was pretty clear that the film industry is changing, and we're finding sort of a new way in which movies are released. And so you're not going to see the same type of theatrical windows. Movies are going to come much, much faster to streaming and avoid theaters or be shorter in theaters. And so the film industry is fundamentally changing. that dynamic is completely lost on the retail buyer of this. They're not buying it because they look at the financials. They're not buying it because they understand the future of this company. I mean, if they were excited about the industry, they'd be buying Cinemark and IMAX and many other stocks. That's not happening. They're simply just buying it because somebody else on a Reddit message board told them to go buy it. So it's sort of this follow the herd. And again, I don't know what ends this. I really have no idea. The fact that I think it would be, pre-open this morning, I think it was trading at like $75 a share. I have no idea what changes the course of this stock. All I know is from an earnings standpoint, this company will struggle to ever get back to what it earned in 2019, given the changes in the film industry. It's way behind on its rent payment, so it's got a lot of deferred rent. It's way behind on its capital improvement, so its CapEx has to go up. And so it's got higher rent expense, higher CapEx, and it probably never earns the EBITDA it earned in 2019. That's a really tough place to be when you're still sitting on billions of dollars of debt. I just hope Adam is smart enough to somehow convince all of these shareholders to absorb, massive dilution from here.
Rich, we're going to leave it there. Thanks so much for joining us. Always good to talk to you.
Thanks for having me.
Rich Greenfield, Lightshed Partners. Karen Feinerman, Adam Aron has earned the name Silverback amongst this Reddit community for his support of the Dian Fossey organization. Do you think that he will have the power to convince people that dilution may be in the end in their best interest if it actually saves the company?
Well, he has so far up to here. I mean, if you had said 2 months ago, listen, you're going to be able to issue, $600 million worth of stock at, 53 was the average price ish, maybe. That would have seemed highly unlikely. I mean, and yet here we are. So if he's like, guys, I need your help. It's really risky, but I need your help. Who knows? This is insanity. But good for him for navigating it. I don't get it as a long shareholder. I don't get it.
I don't think we could find a single investor, IRL. You know how you play that game, like who would do this?
IRL,
raise your hand.
in real life.
That sort of thing.
Oh, is that what that means?
I
thought that was an internet thing.
It is an internet. But can you find a single person IRL who would buy that stock right here? Who would buy it right here as an investment? Like thinking about long term, after everything we just discussed, after everything that Rich, in a very sober manner, just discussed, there's no fundamental reason for it, right? So we have a stock market mania. We have people doing things that are against their best interest.
Can I ask a question?
Sure, it's your show.
I know. That question was rhetorical. On Wall Street, aren't there traders out there on various desks who simply trade momentum? There's no fundamental reason for a swing higher or a swing lower. But that trader on that Wall Street trading desk trades the momentum. And yet, why are we criticizing these investors for trading the momentum?
They're largely quantitatively based. I mean, they're basically, it doesn't matter if it's AMC or some other ticker, right? They're taking all these other inputs. I mean, what we're just describing here is that this is this diamond hand situation. It's stick it to whoever, that sort of thing. It's a game. They're playing it on their iPhone. And again, if that's what you're in it for, have at it. But understand that this stock will likely be much, much lower from here, probably 50% in a month from now.
I missed the live have at it's with Dan, with Salty
right?
Dan.
It's different when it's live.
I don't think, I can only speak for myself, but I don't think I'm criticizing. I'm not criticizing this crowd at all. I've said a number of times during GameStop that these folks, these guys and gals, I mean, some of them are brilliant and actually understand the things that the people get paid to understand don't. It's fascinating to me. Gamma and all the options activity that you've seen, right? And all the not statements, but all the metrics you use with options, they understand it intuitively. So I think it's fantastic. We point this out because I think we have an obligation to point out when things just don't make sense. It doesn't make sense right now. And by the way, I'm still not convinced there's not the Mel Gibson Braveheart character somehow using the crowd to his advantage. There's some group of people out there. We don't know.
There's a lot we don't know about this.
And there's no question to me that the same way, use whatever they were 10, 15, 20 years ago, they're using these folks on these Reddit boards to their advantage as well.
Yeah.
Shepard Smith here. Thanks for watching CNBC. on YouTube.